Good morning, everybody. It is Thursday, April 11th, 8:46 a.m. We are back here again for another market open. This is an interesting one. I'm looking at data right now. We got PPI data coming out. And this PPI data is good. It's not bad. Market took a nasty hit just like an hour ago, and it's recovering a little bit, but it's not recovering as much as I would think it would recover. So we got to talk about that PPI. That's a big deal right now. That is the producer price index. For those that don't know, it's how much producers have to pay for goods and products and services, which is ultimately how much we're going to have to pay as consumers, because if the producer has to pay more to create, the consumer will have to pay more to consume that product. So we got to talk about that. Bitcoin over the past 24 hours actually had a nice little resurgence. Usually Bitcoin starts off the week at 72, falls to the low 60s, and then has to wait till Sunday till it gets back to that 72 level. Last night hit 71, right now at about 70,700. Inflows were amazing on the Bitcoin ETFs yesterday. Outflows were not the best. So we're going to talk about that and go deeper into what's going on with Bitcoin. Google, Intel, a lot of big announcements today as well. And then Tesla continuing to hold up, announcing that they're trying to get into India, or at least getting closer to getting into India. We got to discuss that today as well, given that's what Elon announced yesterday. All right. Thank you all for being here. Let's get into it. Justin, Katie, Open Skies, John Stevens, Missy, Switchblade, Roy, Digital Content, Wick, Benny, Tattooed Investor, Roy, Midwest, Gift Magic, Sergio, Adam, what's up, what's up, what's up? Top Dasher, I'm Beneficial, Sergio, good morning from Portugal. Good morning. Thank you all for being here today. All right, let's get into this PPI data. So here's what we got on PPI. This is what I'm looking at right now. PPI is 0.2% higher month over month. And core is up 0.2% month over month as well. 2.1% year over year, expected 2.2%. Core is 2.4%. So it's a little bit higher on the expectation on core, which matters a little bit more than the headline, right? So market wanted 2.3, we got 2.4. Year over year, a market wanted or thought it would be 2.2, we got 2.1, which is really good. And then core month over month, we came in pretty much in line. Market thought 0.2, we came in at 0.2. Headline, market thought 0.3, we came in at 0.2. So it's not horrible. The US CPI and PPI are now both up for the first two consecutive months, first time since September 23. So we are seeing a bit of a reversal when it comes to inflation towards the upside. We are definitely seeing that. It's not really reversing the way it should be reversing to the downside, but it's not as bad, I guess, as we thought it could be when it comes to PPI. So S&P at 515. The S&P 500 was at 512. Well, you're looking at 515 right now after this PPI data. We were looking at 512 just 30 minutes ago. Robinhood got smacked, and right now Robinhood's at 1775. It was at 1765. We'll see how long that lasts as well. But I mean, a lot of companies got hit. Palantir bounced off of this PPI news. So Palantir was at like $22.12. Right now it's at $22.50. So that's up a little bit. ARK is up a bit. NVIDIA, somehow it doesn't care. It's just, it wasn't even down in the pre-market. But when I woke up like an hour ago, I saw a lot of these stocks were down, pretty tough. And then PPI came out and saved a couple of them, but still a bunch of them are still down. So we did see a pretty tough PPI reading on these. Now, again, this PPI is not as bad as the CPI reading that we got yesterday. And it's not like, taking the market down 3-4%. S&P is still green right now, but it definitely was a hotter reading than expected. 201.76 right now on the IWM as we get this data. Did you add more Palantir yesterday, Mitt? I got 22.19. I didn't add anything yesterday at all. So I didn't get to add anything today. We'll see if I add anything today as well. Citi downgraded Hood to sell. Okay, so that'll do it. That's probably why Hood uniquely is down. Citi. Oh yeah, I got it. Citi. Wow. Yeah, here we go. It's about Citi. Interesting. It's actually Citi. Citi. So that's why Robinhood was down a little bit more than everything else. It was less about inflation, more so about Citi. Okay, so Citi downgraded them. So this is what the analysts wrote. Given the increase in stock price, we believe valuation levels have disconnected from the fundamental outlook. He added allowing Citi to increase its price target on the stock to 16. So it's upgraded to 16 from 13, but there's a sell on it because they think it's fair value at 16. Again, this is I feel like I've been here over the past couple of years. You're here a little long enough to kind of see the Tesla people that are saying that it needs to go down to 120. It's like, okay, sure. Let's have it go down to 120. You got one analyst saying Robinhood should be worth $28, which we got upgraded the other day. One analyst saying it should be $30. One analyst saying it should be 16. It really, the market makes you think for yourself. You know, when you have three different analysts, one says 30, one says 15, one says 12. Who do you believe? Which one has the better reasons, right? Which one has the better analysis at the end of the day? But it is funny that the street can react to certain analysts saying certain things, and then stocks can tank on that. So I think the guy saying that it's overvalued at 18 or whatever, I think he's wrong. The enterprise value of the company is $12 billion when you take away their cash, or $11 billion from this market cap, growing 37% year over year. I think that's relatively cheap. I also think Bitcoin going higher is a catalyst that propels the trading volumes, which also gives it increased revenue as well. So, I mean, I disagree with it, but we'll see how the market interprets that later today. S&P is 515. SoFi is at 760, up 0.53% right now. And then Tesla here at 172, up 0.26% on the day. Interesting. So this is what we've got. Someone said, does Amit drink coffee or tea? Jason said he drinks Dunkin' Donuts caramel lattes. Thank you, Jason, for giving my answer. I'm trying to get deeper into coffee, dude. I don't know, dude. It's like the caramel latte to me, it gets me more than the coffee. It helps me a little more than coffee itself. I want to react to PPI news as soon as it came out. So let me pull that out right here. So let's react to this. And then we have what's his name? We have Andrew Jassy, who is online with CNBC in an interview today. So we'll watch a little bit of that. But here's PPI data in real time. So we'll get a little bit of an update on that.
Yeah, 0.3 for headline. And I think really what many are paying closest attention to is that last month's headline was up 0.6%. That was the hottest run month over month since June of 22. So many are looking to see how much of that we reverse. So if that comes in even at 0.5 or 0.4 today after 0.6, that will be significant. We're a few seconds in front, of course, of March PPI. We're also going to be watching claims quite closely. And the numbers are our final PPI headline month over month, up 0.2%. It definitely eased back from that up 0.6. 0.2. Well, you have to go all the way back to equal it in September of last year. To find a lower number would be June of last year when it was 0. Up 0.2 when you...
That is crazy. We have to go to June of 2023 to see a lower number than what we're getting right now. It is reversing the downward trend on inflation month over month, which sucks, but it's not the worst thing in the world. It's just one of those things the Fed is going to have to look at until, it's going to have to keep coming down before we can get that rate cut.
Strip out food and energy, that follows 0.3. Strip out food, energy, and trade, up 0.2. Our last look was up 0.4. Up 0.2 in this category is actually the lightest level going back to November of last year. And if we look at year-over-year headline, we're expecting 2.3. It comes in at 2.1. Year over year, 2.2 we were expecting, comes in at 2.1. That follows 1.6. 2.1 there is the hottest level going back to April. So there's the first number that is definitely a bit hotter than our last look, even though it's a little less than expectations. Many are going to compare it to the actual number. Strip out food and energy. So we go from headline to core, 2.4. Higher than anticipated, much higher than a 2.0 in the rearview mirror. 2.4 is the highest since August of last year. And finally, 2.8 is our ex-food, energy, and trade. That follows 2.8, which actually was revised to 2.7. These 2.8.
So look at the Dow Jones while he's saying this. We have that little dip right there, as you can see as I zoom in on the screen, and then you can see it spike higher. So you see that little dip right there to 38,590, and then it spikes all the way to 38,670. Literally, in a matter of seconds, the market decides that they're going to eat up that dip. And it's really incredible. It's really, really incredible to see how that's playing out. and how the market's interpreting it. I mean, look, Tesla's at 172. S&P is at 515. It's up 0.22%. S&P bottom right here. You can see that here, 512.10, right there, 512.10, all the way bounced up higher to 515.26. The market is unbelievably resilient in the face of some pretty nasty data. NVIDIA, for goodness sakes, is up almost 0.5% in the pre-market after being up 2% yesterday, trying to make its way back up to that $900 range because the market doesn't care. Benny says, I think it turns red on open. Put in the chat. What do you think? You think it turns red or green on open? I'll say, I think it goes green. I think the market keeps going green on open. I mean, I'll probably be wrong, but I kind of think we go green on open. We'll see. Maybe we just open and we flat out go red, or maybe it's a little slight red and then we go green. But I think it's not that bad. I wrote about this yesterday, so this is what I wrote on right before I went to bed on time, like I was supposed to yesterday. So we went from 77 to 54 on the fear and greed scale. Okay, it's so funny. Like we were at 77 when the S&P was 520. Now the S&P is 515. Not really that much higher or lower. Now we're at 54. So the sentiment has shifted, even though the market prices haven't necessarily shifted, which is actually a really good place to be in because it means that there is more momentum, even if the market didn't have to go down for that momentum to occur. So to me, it just feels like there's a real catalyst with AI. And if people have jobs, the market can continue to pour money into fantastic equities. $6 trillion is still on the sidelines. Maybe a rate cut is delayed by a few months. But if Q1 earnings go strong and unemployment stays at 3.7 to 3.9, time might be on the Fed's side for shelter and energy to eventually go down. So like, imagine there wasn't a geopolitical Middle East crisis and oil was not at $90 a barrel. It was at $65 a barrel. Imagine if that was the case. I think that would totally rechange how people are thinking about inflation. But unfortunately, we have oil higher, not because of JPOW, but because of the Middle East. So I think we need a good Q1 earnings plus advancements in AI, like what Google and Intel showed off over the past couple of days, really ignoring all the noise and just saying, hey, we are moving forward in the context of chips and artificial intelligence, plus unemployment staying around 3.7 to 3.9, which will equal enough time for the Fed to hopefully see inflation start to come down dramatically in shelter and energy, which is over 50% of CPI. And I think the market believes this equation is going to play out. The market believes good earnings plus low unemployment will give the Fed time, which means even if we don't get a rate cut till October, we're going to get that rate cut, and that will propel the market to have upside and not have to have some, crazy recession because people have jobs they're able to spend. And if they're able to spend, once inflation comes down, there you go. You don't really have this horrible economy that the bears are saying is going to exist. And what has led that to happen even more is what we got right here. What we got right here. Most people are saying it's kind of mixed. 50-50 is red, 50-50 is green. Yeah. All right. So we'll see. Got a bunch of greens, a bunch of reds. This news that came out yesterday after hours was just astonishing to me. Who heard about the Costco news? Because this to me was just crazy. Costco increased their dividend from $1.02 to $1.16. This is after they gave a special dividend, I think like 6 or 7 months ago. That was really, good for their shareholders as well. So why did they increase their dividend by 14 cents? In my opinion, they basically told the market, hey, we did the math. We have too much freaking money. We don't think consumers are going to stop spending, so we don't need to hoard the cash and be conservative. Thanks for being a shareholder. Here's an extra 14 cents for every share you have. If Costco felt we were on the brink of a recession, they would be hoarding cash because if they expected consumer spending to go down and profits and margins to go down, they would need to keep their cash and they would put that cash into treasuries or some other type of asset that they could be able to make some type of interest income on. And that would be able to juice up their numbers. Basically, what Palantir is doing every quarter. They need a way to maintain profitability. A lot of these companies are doing that in their first sort of profitable years. They're just getting treasury net interest income and boom, they're profitable. If Costco felt that sales were dramatically going to decrease, they would not be giving an extra 14 cents per 400 million shares that they have to shareholders. They would keep that money and save it for a rainy day, essentially. They're looking at the data. And in my opinion, they're looking at the data and they're seeing disinflation, deflation, consumers continuing to spend, unemployment continuing to be low. And even if this was a hot inflation and they could have readjusted, they decided that inflation is not that hot and it's not going to affect their overall business. Also, March sales in Costco were $23 billion, which were up 9.4% year over year. So you don't see a company do that if we're going to have a recession. For all the bears that are like, oh, everything's screwed. It's like, Why is Costco giving out that much more money? Like, companies don't, Meta doesn't give a dividend if it's that bad, if they don't think for the next year and a half, they can understand their projections. If they don't think, oh, well, we fired 20,000 people, so we have a ton of money, we can give something back to our shareholders. So I don't know. I think that was very bullish news, even if you're not a Costco shareholder yesterday, just for the broader market. And we'll see how that implicates itself over the coming months. So we'll see what happens there. We had Tom Lee. Let's get his perspectives as well. He also thought that it wasn't that big a deal in the context of the reading that we got yesterday. So let's see what he had to say, and what his perspective is. Also, we got to talk about that Destiny ETF, guys. I've been saying it wrong this whole time, and I'm surprised no one corrected me. It's not an ETF. You can't sell once you're in. So let's listen to Tom Lee, and then we'll talk about that. That I learned that last night, and I was like, what? That's kind of crazy. All right, here's Tom Lee on inflation. Then we'll talk about that quote unquote ETF.
Having you on, don't need to remind you, but I will. The last time you were here, you said this.
By the time the Fed meets in June, there's going to be a total of 3 inflation reports: March, April, May. I think by then markets are going to be a lot more confident that inflation is falling, and the 3 cuts actually may be too low. There's a possibility there's more than 3 cuts this year.
So Tom has this report. It's just one, and PCE could go down, but has this report changed your views?
Well, Brian, as we know, the Fed is data dependent, so they're watching these reports. The markets are expecting the Fed to react to these, and so it is going to push out the probability of a June cut. But that being said, I don't think this entirely eliminates the possibility of a June cut. It just makes so much more weight now on the April CPI report and a May, and those are still 2 months ahead.
Yeah, and listen, I'm sort of thinking more no rate cuts. That's just me. But as my trusty producer, who you know well, Max, reminded me, Jay Powell, the Fed chair himself, has effectively kind of said we're probably going to get one. We just ran the president's, not to be political, but the president effectively hinting, nudging, whatever, that we're going to get one. Maybe it's silly to bet against that, looking at the data, but the people that actually make the decisions in the Fed are saying we might get one.
I think it makes sense to expect a rate cut, only because if the Fed's notion of a neutral rate is 2.5% or even 3%, we're at 5.3%, then the Fed is running very restrictive monetary policy. And when you look at their summary economic projections, we only need a few basis points of unemployment increase to hit what they expect to happen this year. And PCE, which, as you mentioned, is the Fed's preferred measure, it's not expected to hit 2% this year. It's supposed to track towards 2.5%, and it's, potentially it's 2.7 when we get that in 2 weeks. So I think we're tracking there. So I think it would be difficult for the Fed to sort of turn hawkish at a time when a lot of the sort of benchmarks they're using are actually tracking towards what they expect.
So again, Tom Lee basically saying, you know what, it was a nasty report, but he believes that the next 2 reports will be dovish, will be good, and the Fed will be able to make the decision that a rate cut is inevitably coming. The one thing I think it's going to be hard for Tom to get right, at least on the next report, is oil prices. The Middle East crisis is keeping those guys up. Oil right now, it is down today a little bit, about 0.56%. But if these $89 barrel oils don't get down to 65, 70, which I don't know if that happens over the next 2 months. It's basically the Red Sea Houthi crisis that started in January. We're not seeing the effects of that until now. And I remember in January on the market open, we were talking about it. And I was like, yeah, that could hurt oil. But it didn't hurt oil, right? But now, months later, yesterday there was some news that potentially Iran is planning to send a missile in Israel. And all this stuff is jacking up oil. If that doesn't resolve itself over the next 4 to 5 months, if shelter doesn't come down as well, then we're just going to have hot inflation. It's inevitable. Shelter and energy are going to keep this thing hotter than expected. So either shelter's got to come down or oil's got to come down. Right now, I would bet shelter comes down before oil because oil is not coming down. And that hopefully will be what the Fed needs to see in order to eventually raise rates. So that's what we got in the context of Tom Lee's perspective. Now let's move to DXYZ. Okay, so that ETF, with that Destiny ETF thing we've been talking about. So the founder of the thing went on CNBC yesterday. Okay, so this is what it looks like right now, right? You guys see this? $61. It's up 9% of the pre-market. I'm gonna press buy. Okay. Okay, I'm just gonna buy a. Okay, so from what I'm understanding, maybe it's not because I don't have any. That's why it doesn't have the sell. But the guy yesterday said you can't sell it, right? He said you're not allowed to sell any of it. Let me know if you guys can actually sell. Here's him on CNBC talking about this. Basically, the fund doesn't allow you to sell once you're in for some reason. Like once you get in, you're not allowed to sell. And I found that fascinating. I was like, well, how is that an ETF then? It's not really an ETF, it's a fund. But here's the owner, CEO of it talking about what that fund is to get exposure to like SpaceX and OpenAI.
Along the way, down 12.5% just today. For more on the private market approach, we are joined by Destiny founder and CEO Sohil Prasad. Sohil, great to have you with us.
Thank you for having me.
Just to be clear, this is not an ETF. This is a closed-end fund. So once you invest, you're in, correct?
That's correct.
Okay. In terms of how the stock has been trading or how the fund has been trading, as we mentioned, astronomical gains. But the value of the underlying assets is under $53 million as of December. Should it be trading here at such a premium?
Yeah, what we've seen is it's kind of become a cultural moment. These are companies that any other time in history would have been public companies, but over the last 10, 15 years are remaining as private companies. And so people have thought about different ways to access these companies, and there's never been a liquid, transparent way to do so. So that's been driving a lot of interest that we've seen across the market.
So that
Okay, so you can buy and sell it. You can buy and sell it. So I don't know why they said yesterday you can't sell. The broader point besides buying and selling is that the amount of money it's worth in terms of their OpenAI and SpaceX exposure is 53 million, and the fund is worth something close to 700 million. So a little bit of a 8x premium. And there's not really an explanation for why it's trading that high.
that froth, that premium, whatever you want to call it, that's because of the scarcity value of this.
I think the market is still discovering it. Most people haven't heard about Destiny yet. And right now there's people being like, wow, I can finally access these companies that I know and love and hear about every single day.
Give us a sense, because we could go to Stripe. I mean, these are companies that have been around a long time. They've been in the private markets. Most of us who've been in the markets for a while, you would have expected these companies to come public. What was the moment? Was there a light bulb that went off or something in your head saying that this is going to be a trend that continues for a while?
Yeah, it was 5 years ago, actually. I was 25. My dad finally asked me, what should I invest in? And I told him, I don't know, SPY or QQQ. But it really made me think about why wasn't there an SPY or QQQ for private tech? I founded the largest secondary market for private shares, but that only touches a very small fraction of the world. And so that's what we set up to build, is something that anyone can access from their brokerage account that invests in these companies that shape the future of every industry as we know it.
Okay, so you can buy or sell the ETF. The fund cannot issue new shares. Got it. So that makes a lot more sense. So having said that, that means, basically if OpenAI announces some horrible news tomorrow, the fund can't get out of it, right? They're stuck in it, which is what happens if you're a private investor. You kind of just have to deal with what happens. It's not a liquid stock that you can sell up or down. The net asset value, the NAV of this fund, as we saw on that graphic, is $4.56. Currently, the fund is trading at $60. So the reason there's a premium is because, in the words of the guy who's just on the screen, his argument is people want exposure and they're willing to pay a premium to get exposure. Now, should you be willing to pay 15x premium to get exposure to SpaceX and OpenAI, which are the majority of the $53 million that the fund is holding for? I don't know. I think a lot of the upside is kind of like a 15x on just having to pay to get exposure to those companies. To me, seems a little aggressive. But that is a better understanding, hopefully, for those that are wondering what this Destiny ETF is. And fair value is $4. So just take it for what it's worth in terms of how that plays out. So that's what we got on the Destiny ETF. Okay, so what else do we have going on in the pre-markets? Robinhood down 2.78%. If you're just joining, Citi downgraded them. They are worried about Bitcoin's volatility, and therefore that is the reason why they said Robinhood can go down. One thing to think about is Bitcoin right here trying to get to 71,000. Bitcoin's volatility also is what gets Robinhood to the upside. So risk reward is there. If you believe in, I've said this since the beginning of the year, if you believe in Bitcoin, you got to believe in some of these proxy plays. Now you have to do due diligence on the proxy plays, but Bitcoin, like this thing goes to 100,000. The proxy plays are not going to be stuck at the levels they are right now. Now this thing goes to 30,000, same effect. So really it's a question of, is it closer to going to 30 or 100? And based on how you answer that question, I think you get your conclusion for Robinhood, CleanSpark, Marathon, etc., Coinbase, all those guys. Coinbase right now up a little bit in the pre-market, 252. CleanSpark, 1530. What other crypto stocks do we have right now? MicroStrategy should be up. MicroStrategy is down a little bit, 0.19. It was up 9% yesterday. Bitfarms up 2%. Marathon up 1.15. And then CleanSpark up 1.6% right now in the pre-markets. Kathy's fund has all those as well without the premium. Yeah, I think Kathy's venture fund is probably even better to get exposure without the, crazy premium that Destiny is selling at. The one thing about Kathy is she has a lot of companies. Destiny, I think, has a couple. So you are buying a little bit more of exposure to other startups that maybe you don't want to get exposure to. But maybe that's more diversified, right? So that's another reason why it's better to get Kathy's fund. Mag 7, we have Amazon up in the pre-markets. Wow, Amazon is about 45 cents away from all-time highs. Very close. Amazon right now 187 in the pre-markets. Nvidia 876. Tesla again 172 holding up. We'll talk more about Tesla in a second. Meta 523. That's up 1%. Meta got upgraded to $600 by a firm today. The idea is that they are going to grow 25% quarter over quarter, do $34 billion in revenue. And I forgot the name of the firm, but they upgraded them to $600. They think they're cheap, and we'll see if those earnings. I mean, if Meta goes to $600, dude, it would have gone from $395 in January to $600 by April. I mean, it's and you could argue it was completely justified. It's not market mania. That to me is not a sign of an economy that is like holding on by a thread by any sense of the imagination. That to me is like investors really want to invest their money into high quality companies, and they're going to really, hold your feet to the fire to put up the numbers. But if you do, they're going to give you their money along with the $6 trillion on the sidelines. That also is probably not going to want to just collect 5% over the coming months if a company like Meta can perform. So we'll see what happens there on those earnings. Microsoft 427, and then Apple here at 168, inching a little bit higher on the day. Troy says, I think volatility in Bitcoin is good for Robinhood. They make a lot of money on buying and selling of crypto. Is my thinking wrong? Your thinking is not wrong. The one thing to understand, though, is if volatility is toward the downside, Robinhood makes money and all these brokerages make money in the short term, but because of the transaction fees when you're selling your Bitcoin, right? They make money off that. But then if no one buys Bitcoin or no one engages in the crypto markets because there's a downturn, then that's a 1 quarter phenomena for Coinbase and Robinhood, et cetera. So if Bitcoin goes from 60,000 to 30,000 tomorrow, Robinhood will make a ton of money. Coinbase will make a ton of money just off the transactions off you selling your Bitcoin, right? If people are going to do a lot of selling. But then if in the next quarter, Bitcoin's stuck from 30,000 to 32,000 and there's no real selling or buying, then they're not going to make that much money. And the market's going to price in that future quarter into the current price. And so that's why volatility is good for now, but you also need, the price to still appreciate in order for continued volatility. And if that doesn't happen, then that's what the market will price it in to be bad. Is there an AIP live event today? Yes, there is. So I'll be there at 12:45. If you guys want to join, here's the link. Chad, who is a Palantir employee, he is going to be there presenting. The link is right here. I'll actually just put it in the chat. I'll be there at 12:45. They're going to be presenting live all about AIP Now with Lowe's. So they're going to be showing one of the first use cases of AIP Now, which is one of their kind of new workflow platforms that anyone can be able to just like download automatically and start using on their data. And they're going to be in collaboration with Lowe's at 12 o'clock to 12:45 Eastern Standard Time. So it's not pre-recorded. It's a webinar. I'll be there. You'll be able to ask them questions as well. So I think it'll be pretty cool. And we'll get to see a live demo of AIP being used in real time, which I think would be good. Arthrop says, with that logic, Robinhood should have amazing earnings because Bitcoin has almost doubled. Well, that is one of the reasons why I am bullish, right? Bitcoin has done pretty well over the past 3 months. So I think their earnings will be decent, right? Yeah, I agree. I think those earnings will be pretty good, and we'll see how it plays out. I also think, dude, the momentum around Bitcoin is just insane. We talked about it a little bit yesterday on the market close, but now we have Hong Kong that's getting ready to line up these Bitcoin ETFs. The rumors are that by next week, these guys are going to get ready to launch them. And you have Hong Kong launch Bitcoin ETFs. You start a little bit of a domino effect of a lot of companies or a lot of countries across the world, especially in Asia, that are a bit more friendlier to Bitcoin. They're going to start having momentum when it comes to Bitcoin in general. And so it's going to be really interesting to see how that plays out. And if that domino effect happens, what I was saying yesterday is that FOMO is going to happen across the entire world, dude. Like FOMO is going to happen across the entire world when it comes to Bitcoin. And it's going to be hard to necessarily stay away from it, especially if you're a country that's seeing other countries have profits on Bitcoin. This is the CPI over the past 12 months. So as you can see, 2023 March, we were at 5%. We went all the way down to 3.1 in November and January, and then accelerated back to 3.5. So from March to March, we're down 1.5%. But, you know, it's just not, it's not enough, or it's at least not as much as what the Fed wants it to be. Try this link. Oh, the reason the link has a 404 is because it came in as two things. Here, let me send you guys the tweet. The tweet itself will have the link in it, and you guys can just go from the tweet. So here's the tweet to the Palantir link, and you guys can go to this one. Yeah, the link got cut into two pieces. Yeah, here you go. Okay, let's listen to Jassy, Amazon CEO, talk on CNBC for a little bit. Amazon approaching its all-time high after 2 years. Nice V-shaped recovery. Let's see what he has to say about what's going on in the world of Amazon.
Here in Seattle this morning at Amazon's headquarters. And earlier this morning, company CEO Andy Jassy released his annual letter to shareholders, touching on everything from product pricing to cost cutting to delivery speeds, artificial intelligence, and so much more. And Andy Jassy joins me now in an exclusive interview. And we're thrilled to have you here.
Thanks for having me.
Thanks for waking up early to do this. You know, we were just talking about this inflation data. And before we even get into Amazon, I'm just so curious, given that you have your tentacles in so many parts of the economy, from the consumer to the business side of things, how you see things and how you see things as it relates specifically to inflation right now.
Well, what we see are consumers are spending, but they're just being really careful about what they spend on and how much they spend. And so wherever they can, they're trading down an average selling price. You know, you see you see consumers wherever they can find a deal, they take the deal. We see it's going to take a lot for people not to buy detergent or shampoo or things like that. And you can see that in the growth of our everyday essentials business, which last, you know, Q4 of 2023 was over 20% year over year. Some of that is because people are going to buy all the time, but some of that is just because of the speed that we have and we're getting to people, so they consider us for more. But people are still, they are still buying. They're just being careful about what they shop for. And then
but you're seeing a trade down.
We are. We see people trading down on ASP wherever they can. You know, and then I'd say on the enterprise side, you know, the last couple of years, companies have tried to save money however they could. And we saw it a lot in our AWS business and the cost optimization we saw. But I think a lot of that cost optimization has attenuated. And we've seen a lot of the deals that people were talking about with us for a long time, you know, that were sitting on the back burner have started to move. Migrations have picked up again. The pipeline is really full. And I think people have moved from largely trying to save costs to figuring out how to modernize their infrastructure again, move from on-premises to the cloud, and then think about how they can use generative AI to change their business.
Are you seeing, though?
One quick breaking news, guys. U.S. credit card delinquency rates were the highest on record in the fourth quarter, according to a Federal Reserve Bank of Philadelphia report. I'll be looking at that to make sure that's actually correct. But from what I'm seeing, credit card delinquencies are up, and they're the highest they've been in a while, according to the Fed.
On the cost side, on the inflation side, things continue to rise. Are there places where you see price declines? Are you seeing anything in terms of wages, either on your own employees or others?
Again, we see consumers are spending; they're just trading down. You know, a place where we see it, real impact is, you know, in discretionary items, things like TVs or computers or electronics. You know, we're growing our market segment share at a faster rate there than others, but still at a lower rate than what we see in a healthy economy.
I want to start, I mean, there's 100 places to go here because you touch on just about everything in this letter, but I want to start with AI because it seems to be the buzzword of everything. When we were here last year, we were talking about AI, but it was unclear, I think, completely where Amazon was going to play in this AI world. And you now say it is going to change everything, and that you have really almost shifted the whole company towards AI in almost every space now.
Yeah. We've been saying it for a while, and I do think that AI is going to transform every customer experience that we know. And I think a lot of the discussion has been around applications, and starting really with ChatGPT, which really caught people's attention. But we think there are 3 big macro areas of the generative AI stack, each of which are gigantic, and each of which we're investing deeply in. And I think of it as at the lowest layer are for people that are building their own large language models. And the 2 things that really matter there is the compute to train the model and to run the predictions of the inferences. And what matters in that is the chip.
Right.
And then the services that you have to actually build models. And we've got very significant investments there. Most of the early AI models have been built by NVIDIA, but supply is more scarce and people are concerned about cost. And so we've built our own custom silicon in AI. We've built a training chip called Trainium and an inference chip called Inferentia that are meaningfully more price performant than what you can find out there. So a lot of the training, a lot of the predictions are going to be done on those chips. And, and then I would say at that middle layer of the stack are for people that are going to actually leverage somebody else's model, but customize it with their own data and then use our features to make it easy as a service. And we built the service called Bedrock. And a lot of the generative AI applications are being built on top of Bedrock because it's the easiest way to build a high quality generative AI application. Then there's the applications of which, we're building a lot of them ourselves, but the vast majority of those will be built by third parties, and we're optimistic a lot of them will be built on AWS.
Let me ask you about this. Let's talk about large language models because there's just so much focus on it. You have now made investments in Anthropic, which Google has also made an investment in. You're building your own large language model called Olympus. How are you thinking about investing in things like an Anthropic versus trying to build your own?
Well, I think the one thing that we've seen pretty consistently in this relatively early stage of generative AI is that customers want choice. They're learning how to build models. They want different model types for different types of applications and use cases. They want different model sizes because it changes the latency and the cost structure. And so, part of the attraction for so many people of Bedrock, I was just mentioning, is just it has the largest selection of models available. It's got not only models that we build, but also Anthropic and Meta with Llama 2 and Mistral and Cohere and Stability AI. So you have a lot of choices. And then Bedrock makes it really simple to move between models and move between model sizes so that you can actually experiment and get the right quality and latency. We're going to, for us, and we see it with our own, we're building dozens of generative AI applications right now, some of which are launched, others are in development. We find it with our own model builders and our own application builders that sometimes they want to use our own models, sometimes they want to use third-party models, and we're going to give people choice so they can make those decisions.
How important, though, is it for you to catch up on having your own generative AI large language model? Meaning this Olympus project, which has been reported on, how important is that? How far behind do you think you are? What do you have to do to get that to the same level as where Anthropic may very well be or where you believe OpenAI is today?
Well, I mean, first of all, what I would tell you is that this is going to transform virtually every experience we know. It's a gigantic space, and there are going to be a lot of very successful players in it. And if you go talk to enterprises or companies that are using generative AI, they are very excited about what we're building, and more customers are moving to our services. And we're going to have partnerships. We have a very deep partnership with Anthropic. Claude 3, which they released just a few weeks ago, is the best model on the planet right now with the best performance, and it runs, best on top of AWS. And so our customers are very excited about that. But at the same time, we have a lot of experience building models at the company. We've been doing it for a long time, and we've been building our own models, and these Titan models we have, we're going to keep building those, and we're going to give people choice.
Big issue.
All right, well, we'll hear the last question, then we'll move on from there. I have a little bit to say about this Anthropic stuff, and we'll just hear one more question, then we'll move on.
With building these models is the data input that's being used to train. Do you know, for example, with your new large language model, what data you're using to train it on? There were reports that OpenAI was desperate for data. They actually built a program just so they could create transcripts of YouTube videos so they could train off the transcripts because they didn't think they had enough data. And that, of course, raised questions about copyright and the like. But I'm so curious how you guys are doing it.
Well, we have a group of people that spend a fair bit of time, all the time, by the way, because the landscape continues to evolve. But thinking through the best way to build the models. We're very thoughtful and very careful about what data we use. We of course have some proprietary data and some licensed data and some publicly available data, and we use all of it.
You have all the
sources.
Some people ask, because, and someone asked me this, you have all the books in the world, many on Kindle. Are you able to train on that data?
Again, there's some of that data we can train on, and again,
this is Jassy trying to say, yeah, we're using everything we can use because we don't care, but I'm not going to say that we're using everything that we can use. Like, there's no way Amazon's not using stuff that they probably shouldn't be using. It's just the name of the game. If OpenAI is using stuff they can't use, if you want to compete with them, you got to break the rules as well.
And we try to be thoughtful about what data we train on. We also do licensing deals in some of these cases in different types of data. And so, these models, they're getting smarter and smarter. And,
right.
and I think you've probably read about, as you build these really big models, we have not yet gotten to a point where the models are so smart that they wouldn't benefit from more data. And so, I think people are looking for data, but we're being thoughtful about how we use it.
Okay, cool. So in the context of Anthropic, I know a lot of people say it here are making this joke about Indians in the chat. The joke around the Indians is that Amazon had this Amazon Go type of a product at Whole Foods. Some of you guys may have used it, where you walk into Whole Foods, you pick up like a bag of chips, and you can just walk right out. And then Amazon supposedly was using AI to just scan the chips. And so they would just charge your Amazon balance so that you wouldn't have to actually sit at a cashier and pay for it. They got rid of that entire system because what was revealed is 1,000 Indians in India were tracking people as they walk and using like real-time computer vision and then matching the object you were picking up and then labeling that as part of your Amazon balance. And so that definitely made people feel that AI is not as advanced as we think it is yet, because that Whole Foods experiment couldn't really work out the way Amazon wanted it to be. Right now, Amazon 186.93. However, even if Amazon's AI aspirations in the ability to replace cashiers isn't fully ready yet, Anthropic is pretty damn good. Claude is one of the best models that's out there. I use GPT on a daily basis at this point, and GPT is pretty damn good for me. I think we're getting GPT-5 in another couple months, Sam Altman said, so I think that's going to be even crazier. But in terms of catching up, Claude is not bad. Gemini is good. I wouldn't say Gemini is as good as GPT-4 yet. And Claude is up there with GPT-4. So Amazon has put in a lot of money, I think at this point, over $4 billion into Anthropic, to be able to compete with OpenAI. The idea being, if Microsoft has their sort of a LLM creator, that they own 50% of, and if Amazon could have the same thing on their side, the implications for being able to have proprietary access and then equity in one of the largest LLM providers on the planet, it's a winner-take-all market. YouTube with video online, winner-take-all market. Facebook, Instagram, winner-take-all market when it comes to social media. A lot of times these network effects thrive with winner-take-all models. I think LLMs, because they are commoditized, are not necessarily winner-take-all. But if someone's using GPT and it's theoretically a commodity, they don't need to use Gemini or Anthropic. It kind of is first mover advantage, which gives you a resemblance of a winner-take-all market. And that's why they're really trying to compete with OpenAI to not let GPT be the only de facto LLM that exists in the market. And so I think it makes sense that they're doing this. The question is going to be how they're going to implement it into Amazon's advertising models, how they're going to make Amazon products more easier to sell from a recommendation perspective. That's what they're doing with Rufus, which is one of the new chatbots they rolled out. And I think if they do that effectively, Jeffrey's price target at $225 on Amazon, that is very possible over the coming year if they can keep doing what they got to do. All right, 9:30 a.m. Thursday, April 11th. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. We are back and we are alive once again to witness the stock market actually be open. So what do we have going on in the markets? We've got SoFi, 754, down 0.26%. Opendoor, up 1.19%. PayPal, again, for those that are just joining, PPI came in slightly hotter on some metrics, slightly lower on some metrics, whether you're looking at yearly or monthly. So market kind of digested the news, didn't care too much about it. PayPal is barely down, 65.85. Now it's green. Snapchat is green. S&P, 515. It was at 512 in the pre-markets. It's green right now, 515. Meta, 521. That's a green. Coinbase, 251. That's green. Robinhood got a downgrade. Are they still red? Robinhood, wow, look at that freaking bounce, dude. That's a bullish bounce. Robinhood was 1770. It was at 1750 at the pre-market, then bounced to 1770. Boom, right up there to 18 bucks. Now it's getting sold off just a little bit, but the fact that it bounced 35 cents in the first 30 seconds of the market opening, I mean, that's a bullish bounce. People were ready to buy those damn shares below 18. Not bad at all. We'll see if that can hold for Robinhood. But with a pretty nasty downgrade from a reputable bank like Citi for the market to still buy up those shares, it means that they basically said the downgrade's stupid, and they were thankful that they got shares at a cheaper price. Tesla 173, QQQ 439. That's up. Nvidia 872. Nvidia investors want more Nvidia. They don't care about PPI, CPI, JPI, LPI, QPI. They don't care about any PIs. They care about more Nvidia shares. 871. Enphase. Wow. Enphase is up 4%. Interesting. Very interesting. I did not expect this one today. That is interesting. Enphase at 123. You would think a hot CPI and a slightly hot PPI would keep this sucker depressed. Nope. They took some antidepressants this morning and they're up 2.61%. Enphase, wow. If you got Enphase at 110, you're up a little bit. Not bad. Not bad on Enphase. We'll go back to that one in a little bit. Apple 168, Amazon 186, Celsius down slightly today, 83.95. Reddit is up a little bit. IWM 201.37%. That is up. IBIT is up. BlackRock's ETF is up. Bitcoin right now, I think is what, 70,000? Trying to get those. Go to the crypto stocks. Robinhood 1813. Just phenomenal performance from that low as the market opened. That's really bullish, dude. It's just, I mean, you can just, that's undeniably bullish for that thing to pop 40 cents off of a downgrade as soon as the market opens. Marathon 1740, CleanSpark 1511, Coinbase 252, MicroStrategy down a little bit. MicroStrategy was up 9% yesterday, so that's why it's probably down right now. But Bitcoin right here, 70,775 as we open the market. Semiconductors, look at the left-hand side of my screen. All green. All green. Green, green, green. There you go. ARM is green. TSM is green. Broadcom. Dude, the bears must be so pissed seeing this. They must be so mad because we got the hottest inflation report of 2024. Now for the bears to make an argument that the market's getting it wrong, SMCI at 917, they've got to double down on their bearish thesis that inflation is going to be so bad, so horrible, that we're going to get to like 1980s Paul Volcker, 20% targets on interest rates. Like they're going to have to get to that level of exaggeration for them to be able to make their claims, because the market's basically saying we don't care about inflation. And maybe the market's wrong. In the defense of the bears, maybe the market is dead wrong. But from the data that we've all been looking at over the past couple of months, maybe the market's like, no, inflation's going to come down. You guys are too worried about something. You're not looking at the technology transformations that are happening. And all of the semis today are green as a result of the market saying we don't care about inflation. Even Intel, which has struggled dramatically over the past 2 weeks, down almost 15%. That one is getting a little bit of green today as well. FinTech, Robinhood 1820, continuing to trend higher. SoFi 761, that's up almost 1%. Affirm is up. PayPal 65.94. PayPal just having great price action over the past couple of weeks as well. Square 79.62, and then Coinbase at 254 on the day. And then all the Mag 7 are green as well. Look at that. All of the Mag 7 is green as well. Michael Rosen says no one is scared anymore. Investors know that the Fed bails everyone gets bailed out, so you might as well go in until the government goes bankrupt. You might as well go all in. I think there is an argument that, yeah, the Fed could be, bailing people out. They're lowering the growth of quantitative tightening. They're going to eventually cut rates, et cetera. But I also think there is a part of the market that says inflation is coming down, and a lot of the data we're getting is lagging. A lot of the data is not as intense as the bears want to consider it to be. And eventually when that data turns to the downside, these stocks would have been incredibly cheap, if you were buying them at these levels. And I think that's, maybe the market's wrong on that, but I think that's how the market's interpreting what we're seeing right now. What else do we have right here? Amazon 186, that's correct. XOM is 122. Oil and gas, again, has been doing well as well. Let's go to the oil and gas companies and see those guys. So we've got Shell is up today. Occidental is up today. XOM, ExxonMobil, it's flat today, but it's a little down, but that's at 122. So oil and gas has been doing well. Interestingly enough, Enphase, which is not in the oil and gas category, has done well. Maybe the reason, and let me know what you guys think about this. Maybe Enphase is up for the same reason that Tesla is up, because of oil and gas prices. People want cheaper energy. If oil and gas goes higher, $90 a barrel, maybe solar, even with high interest rates, is still cheaper than paying the energy prices that people are paying, given energy prices are going higher. Maybe Enphase to an extent is benefiting off of high oil prices because that ultimately implicates high residential energy prices over the long term, and people think or the market thinks, hey, people will just upgrade to solar. Maybe that's the case. I still think upgrading to solar with 7% interest rates is not easy to do for the average American or anyone around the world. So it is interesting that the market's giving some momentum to Enphase here, up 2% right now. NVIDIA as well. Yeah, NVIDIA is just on a tear, 882 up 1.3%. What is NVIDIA's short float? Let me look that up right now because we haven't looked at NVIDIA's short float in a minute. I'm going to predict it's like 7% NVIDIA. Short float on NVIDIA. Oh, wow. Did you guys know this? I don't think you guys knew that. What do you guys think? What do you think is the short float before I show it? What do you think? Put in the chat. What percent? What percent do you think is the short float on NVIDIA? I thought it was 7%. I just said, wow, when I saw the answer. Let me know what you guys think. Let me know what you guys think. Don't look it up either. Don't look it up. If you know it, don't say it because then you're going to say the right answer. We'll get to that in a second. Tesla 173 and Novix 720, Robinhood 1823, dude. Look at that thick, big green candle. It is so big, dude. It went from 1750 all the way back up to 1824. Market did not care about the stupid city downgrade. Oh, Bitcoin's volatile, Robin. It's like, yes, like, no, it's like I would respect them more if they had a better downgrade, but their argument is Bitcoin's volatile. Like, we know that. We obviously know Bitcoin's volatile. Robinhood wouldn't be at 18 bucks if Bitcoin hadn't doubled in the past 3 months. So obviously, like, the market has moved with Bitcoin, but unless you put out a bearish Bitcoin thesis, you can't really put out a super bearish Robinhood thesis. So that downgrade was just not respected by the street at all. Okay, so we have 15%, 3%, 12%, 13%, 5%. Okay, everyone is wrong, including myself. I think one person got it right. It is 1.18%. Dude, I think NVIDIA's short interest when it was 287 back in October 2022 was like 34%, something like that. The shorts are so scared of NVIDIA. This goes to show you, like, NVIDIA's not going to stop because of some stupid inflation. If you have only 28 million shares sold short, 1% of the float, same thing with Palantir, it means that no one is messing with you. Like the shorts, I consider them to be bullies to an extent, right? I'm just making a metaphor here. Obviously, shorts aren't like literal bullies, but like they're bullies, right? They're always trying to tear you down. And sometimes you stand up for yourself and the bully just like realizes they can't mess with you anymore. No one's messing with NVIDIA. No one's shorting them. Same thing with Palantir, short float at 4%. People are scared of touching these guys because they're just too advanced. From a tech perspective, they announce one deal, the stock goes up, your short is screwed. So NVIDIA having a little bit of momentum there from not having any shorts. Palantir right now, 22.55, up 0.58%. Palantir was at 22.12 in the pre-market, so nice little bounce for Palantir as well as soon as the market opened. And that's what you got for Palantir. Adam says, cash secured put on SoFi for May 3rd, $6.50 strike. If SoFi hits 7, the deal is amazing. I got 100 contracts. I'll add another 100 if it drops closer to 7. Not financial advice. So basically what Adam's saying is that he paid $70,000 in collateral, 65,000. So he 650 times 100 times 100 contracts. So 65,000 in collateral. And I think he pulled probably close to 3,500 in premium for about 30 days. And if SoFi goes below 650, he will have an average of those shares, including the premium, of about like $6.10. And it's after earnings. I think most of us think SoFi is not going to 650 after earnings. Now, if it does, then those earnings were really bad. If SoFi goes to 650 after earnings, it was a bad earnings. But I think earnings on April 29th, the thing hopefully gets closer to $9-10. And so not a decent wheel strategy there on SoFi right after earnings at that 650 strike. Not too bad. Merv says he has multiple leaps on SoFi. I do have leaps on SoFi as well. And so, yeah, we'll see. We'll see how SoFi goes. We'll see. They have to have a good earnings. GJT, this one is down 0.18%, still $4.6 billion market cap. Donald Trump company up there right now, or down a little bit on the day. Apple 168, TFC is down, Verizon is down, Opendoor is down, PayPal's down, Celsius is down, IWM is up, Google 158. Dude, Google is just absolutely incredible. Google looks like it wants to see 160 and then above. Google announced new ARM CPUs. They also announced a Microsoft competitor to Copilot with coding, specifically for coders. And they talked a lot about how they're going to monetize this new version of the chip they're making on the AI cloud. So the market is drinking the Kool-Aid when it comes to Google right now. They don't even care about Gemini. They care about cloud computing. And if Google can have somewhat of the growth that Azure's been having in the AI cloud space, you could argue Google's cheap. It's one of the cheaper Mag 7 companies, and they will probably get some momentum there in the context of Google. Will Skills ever recover? So Skills is an interesting one. Skills used to be a Kathy stock. By the way, Kathy Boyd bought another 10,000 shares of Palantir yesterday. She bought 3,000 shares the day before. So 2 days in a row buying Palantir. This is a video game company. I know nothing about the fundamentals of this company, but I do know at one point it was worth a lot. Yeah, it was worth $952. Obviously, they did some reverse splits, and now they're at $6. So the thing has collapsed pretty dramatically. I wouldn't really touch this company. I don't think there's anything there. Kathy has liquidated her entire portfolio out of this. She was buying pretty heavy on this one. She got out of it in early 2022. So I wouldn't really worry too much about that one. Palantir 2243, SoFi 753, NVIDIA at 879 on the day. Again, we're seeing, for those that are joining, not a pretty hot, but a decently higher CPI or PPI, but market really just did not care. Market was like, okay, you got it. Thanks for showing it to us. But 2.2 came in line, 2.4 came in a little higher year over year. Not enough for us to be super, super afraid of what we're looking at when it comes to inflation. And that's pretty much all we needed for the market to maintain momentum and keep going from there. Costco also increased their dividend for those that are not for those that were not here in the morning. Costco increasing their dividend by about 14 cents. Where's Costco right now? Costco price. That's definitely bullish for Costco. Costco, yep, they're up about 1%. Costco's up 10% and now 11% for the year. Not easy to move a company like Costco. It's a big company, $321 billion. So for them to be up 1% on the day as well, very exciting for Costco as well. Where's Bitcoin right now? Where's Bitcoin? Bitcoin is, oh wow, Bitcoin took a little dump. There you go. Wow, 74 all the way down to 69,876. We see this happen pretty much every day. Let's see if it can recover or if it goes even further to the downside. Dude, I think we need this halving event because there is so much liquidity that gets rid of Bitcoin every day once it gets to the 70,000 level. Maybe the halving event and decreasing the amount of supply is actually what creates the supply shock, which allows us to break through from 70,000 because we've been stuck there for almost 2 months now. We have not been able to break through that level. Now, granted, I think we all need to count our blessings because imagining Bitcoin above even 60,000 before the halving event, no one expected that, dude. Like even the most bullish of bullish bulls thought maybe we get to 70,000 after the halving event. But the volatility on it has been pretty incredible. It's just 70,000 has been a hard form of resistance. Robinhood 1803, CleanSpark 1475. So the miners getting wrecked as Bitcoin falls right now. Marathon down about 1.2%. Cypher is down. IRES is down. MicroStrategy down 3% right now. And then Coinbase 249 down about 0.73% as Bitcoin falls from 70,000. You're decreasing dilution, not supply. That is true. That is true. That is correct. It's still diluting. It is still, yeah. The amount of Bitcoin that are coming are less than what before, half than what they were right now at 900. But still, it should, based on the ETF. So let's look at what the ETFs bought. Based on what the ETFs are buying, if that doesn't slow down, there should be the supply crunch that we're seeing in Bitcoin because these ETFs are gobbling up way more Bitcoin than are created every single day. So literally yesterday, BlackRock ate up 33 million. Fidelity ate up 76 million. Total net inflows 123 million. And Grayscale only sold 17 million. So that is, let's do some math here. 123 million. So let's do 123 million divided by an average price of what? Let's call it 70,000 yesterday. That's 1757 Bitcoin that were eaten by the ETFs. There's only 900 created a day. So the ETFs are gobbling up double the amount that are diluted into the ecosystem. When that goes to 450, and now you need triple the amount, or a little bit more than triple, almost quadruple the amount, where are those Bitcoin coming from? Theoretically, that should push the price higher as there is more demand from the ETFs, as long as the ETF inflows don't slow down. If those slow down, then we're not going to kind of have that supply thesis play out. But if that thesis holds true, then there should be a higher asking price on the bid if people aren't willing to sell. But the question is, are people going to be willing to sell? Bitcoin right now just getting back above that $70,000 level, 69,980. We'll go back to that in a bit, but we'll see how that plays out. Robinhood, again, 1815. People ate up that dip at that low 17. Again, the thing that's really bullish here is that the fact that they ate it up this quickly, I mean, we didn't have to wait 30 seconds and Robinhood was back above 18. It means that, and I kind of said this yesterday around the support Robinhood has at 18. It means that people are willing to buy under 18 and they expect it to go above 18, which is really good market sentiment around a stock. You know, same thing we're seeing with Nvidia. Nvidia, this thing did not go below 840 for more than a couple hours before it bounced right back up to 877 over the past 2 days, even with really hot CPI and PPI data. People are ready to buy this under a certain level and they're expecting to get returns above a certain level, which is why they're willing to buy it there. And it's kind of objectively conclusive as the entire market piles in as it gets to those levels, because the market feels that is a deal and the market buys, whether it's Robinhood or Nvidia. So very bullish for both of those companies, seeing those dips getting eaten up, and we'll just see how that plays out over the coming hours and then days as we track the April trading cycle of 2024. S&P 514, ARK Innovation 4740, Tesla 171. Tesla holding up as well. So Tesla, Elon tweeted this last night, aka FOMO. Yeah, it could be FOMO to an extent as well. But it also could just be algorithms, you know? It also could just be algorithms saying, hey, under this price, as per our hedge fund guidelines, we buy this dip. And that's bullish to see as well. So Elon tweeted yesterday that he is looking forward to meet with Prime Minister Narendra Modi in India. Palantir earnings is probably going to be early May. They haven't given out a date yet, but likely early May. So Elon says, looking forward to meeting with the Prime Minister in India. To me, he is creating more optimism and catalyst despite a very hot inflation report and despite the worst delivery numbers since 2022. India and a gigafactory in India would be phenomenal. Maybe that's where they build a robotaxi, the M2 vehicle that functions as a robotaxi. India would be the perfect market, in my opinion, for a very compact vehicle, because India, like, you can't probably be driving a Model 3 on the Indian roads, given my experience in India, but a compact vehicle wouldn't be the worst thing to have that be created in India. So imagine they have a huge subsidy by the Indian government to build those factories, and then they announce on Robotaxi Day that they have an exclusive partnership with India to build the robotaxis. I mean, there's a lot of catalysts from what that could look like, and that's also giving investors a bit more excitement in the context of what can happen with Tesla. So that was big news for India. Another thing we talked about on the market close yesterday, if you missed it, Apple is now producing 1 out of every 7 iPhones in India. They are further diversifying their supply chain from the CCP. They produced about $14 billion worth of iPhones in India over the past fiscal year, which is good because it means that they are continuing to, diversify their supply chains. Again, if China invades Taiwan, we would hope Apple has a lot more of their supply chain in India. That is kind of the fear right now. But that is the update we got from Apple in regards to how much they're trusting India over China. Swiftless says, what are your thoughts on Meta being it being an election year and their new chip announcement? I'm super bullish on Meta. I don't own Meta, but I'm super bullish. I think they're going to crush on advertising. They bought a lot of H100 chips before other companies did, so their AI targeting is supreme. TikTok, it's not, I don't know if it's going to get banned, but people are using Instagram Reels a bit more than TikTok from the data I'm looking at. Facebook continues to get millions and millions of downloads, even though Facebook has 4 billion users every single month. Like, they're just continuing to grow that puppy. And then, then it's election year. There's going to be more advertising in the context of politics. So, I'm super bullish on Meta. The problem is it's up 50% this year. So if you're buying it, you have to really evaluate the risk reward. I think you buy Meta if you're averaging up on a really good average. I don't think you buy Meta if you're initiating a new position, because the most you're going to get maybe is 10% off that, which is just not worth it given some of the other deals in the market. But if you have a good average on Meta, I would if I had a $200 average, I'd be averaging up. There's no reason I wouldn't be increasing my average. Because I have a healthy margin of safety against the current stock price. Amid, how do you feel about CleanSpark going into the halving? I have a significant amount of the money in it as far as my portfolio, hearing many mixed reviews as on what's going to happen. Okay, so here's my objective take on CleanSpark and the miners. And Billy, are you up on your CleanSpark, or are you underwater on your CleanSpark as well? I'm curious what your average is on this one. The only problem with the miners is that they're incredibly volatile, because the assumption is their revenue cuts in half when the supply of Bitcoin cuts in half after the halving event. Now, that doesn't matter if Bitcoin goes up, because if you're a company like CleanSpark, which has very good fixed costs on the amount it takes to mine a Bitcoin, and you're vertically integrated, which CleanSpark has done very well, then it really doesn't matter if the halving event happens, because your cost to mine Bitcoin will stay the same. However, if your cost stays the same and 50% of your business goes away, right? Like imagine you can keep selling your pizza for the same price, but if 50% less people walk into the pizza store, the only way that allows you to make money and increase your margins is if the cost of pizza goes up and people are willing to pay more for that pizza, even if there's the same amount of people or 50% less amount of people that are willing to buy that pizza. So Bitcoin has to go higher. And that's why I keep saying this halving event is so important for the supply shock thesis to play out. Because if Bitcoin does not go higher, if we don't get Bitcoin to 85, 90,000 post halving event within a month, I don't think the miners are going to do well, because they're literally their business has been cut in half. So if you are in the miners, you have to believe, like it is objective fact, there is no wishy-washy against this. You have to believe Bitcoin will get closer to 100,000. There is no way you can be in the miners and not believe Bitcoin goes up another 40%, because the miners' businesses collapse if Bitcoin does not go higher. They literally do not make, they make 50% less money than they were making because they can't mine 900 Bitcoin. They have to mine 450. So that is the thesis you have to think about. Okay, you have 1,300 shares at $13.04. So I think that's a really good average. I know that right now, it's at $15. Again, my thesis is that Bitcoin will go closer to 100,000. So I think your CleanSpark will be fine. That is my perspective on it. But if I'm wrong and Bitcoin does not get to that 100,000 level in the next 5-6 months, or even like 80, 90,000, then I think all the miners, the Coinbases, the Robinhood, all of these guys will struggle a little bit. Now, Robinhood and Coinbase, a little bit diversified business just from crypto, whereas the miners, literally, they're going to be the more volatile ones, because if Bitcoin doesn't go up, the miners are just screwed, right? Whereas Robinhood, there's other aspects of their business than just Bitcoin mining. Same thing with Coinbase, even though it's mainly crypto, but there's other ways they make money outside of literally just buying and selling crypto. But the miners, yeah, they are going to need crypto to go higher. So if you believe crypto goes higher, in particular Bitcoin, then I think you'll be fine when it comes to the miners. Vitaly says, once again, you don't get Bitcoin. Yes, pizza goes up, but they also get paid for every transaction on the network, and network fees go up during bull runs as well. Okay, so if Bitcoin is stuck at 70,000 by October, I would love to know the price of CleanSpark. I will take that bet with you, Mr. Vitaly, who bought Bitcoin in 2012. I will take that bet. If Bitcoin's stuck at 69,000, I have an odd feeling by November, CleanSpark is not going to be above $15. I just a little feeling in my head. And you may be right on the technicals about the network fees. I don't think the market perception cares about that. Market perception cares about, hey, is Bitcoin going higher, and are you getting more than what it costs to mine the Bitcoin in regards to the price of it post halving? And if that's not the case, like, I don't think this is going to go that well. I don't think this is going to go that well. You're right. There will be more transactions theoretically, I guess, in a bull run. Also, but again, if Bitcoin's stuck at 70 grand, I don't know why there would be more transactions in a bull run. A bull run has to happen, which for the price has to go up in a bull run, which would lead to more transactions on the network. If the asset price is stuck at 70K, which is where it's at right now, in 6 months, I think the miners are absolutely screwed. I think the miners are not going to do well because their literal business has been cut in half from a mining perspective. Yes, they make money on the transactions, I guess, but that's not the majority of the business. To my understanding, the majority of the business is mining freaking Bitcoin. So yeah, I do think Bitcoin needs to go higher for this thing to work out. But I guess we'll see. Again, I think the same problem exists with Robinhood and Coinbase. It's not just the miners. MicroStrategy, Robinhood, Coinbase, all of these guys need Bitcoin to go a bit higher. I just think the miners uniquely are susceptible to it because their business goes away if by 50%. Like, imagine you can't do 50% more revenue today structurally. Like, you literally cannot grab 50% more revenue. Something's going to happen there in regards to the price of the value of that business. And I think Bitcoin is the only thing that can solve that, which is why that halving really matters. Mark says the higher Bitcoin goes, the more people their hands at mining, which makes it go lower. So it's a losing game if more miners are in the game. And by the way, CleanSpark's CEO, Matt Schultz, he did say on an interview yesterday, I was watching a little bit, he said that most of the miners are going to die. And that's why I like CleanSpark, because this dude is a rock star, dude. He was just like, yeah, most of these guys are going to die, but we're going to win because we know what we're doing. And I interviewed this guy a while ago. I interviewed him a long time ago. And when I interviewed him back then, he also had that same kind of rock star mentality. where he was just saying, we know what we're doing in mining, and a lot of these guys don't know what they're doing. And so that's why we're probably going to be a lot better than these guys. I want to see if I can find the interview that I did with this guy. Let's see. CleanSpark, Matt Scholl's interview, Amit. Let's see if it pops up. Because I asked him a really good question as well. Oh, yeah, here it is. Let me see if I can go to the part where I asked him the question. I asked him the question about why he paper-handed at 69,000. This is a while ago. When did I, is it in the chapters? Oh, here it is. I think I asked this question. Okay. Let's see.
Interesting. So you're betting the farm on it, but you're one of the uniquely few Bitcoin miners that are willing to sell. And you've talked about that already a little bit. Can you go into a little more detail about how and when you decide to sell versus raise capital other ways, like pulling on the thread that Amit talked about just on the more business side? I'd love to understand where shareholders come in versus selling Bitcoin and things like that.
Basically, why do you have paper hands?
Dude, I didn't give a fuck, dude. I barely knew who this guy was. I was like, fuck it. We're just going to say it.
That's a terrific question, and it's a fair question.
It's a fair question. See, that's why I like this guy, dude. He took it on the chin. He was like, yeah, you're right.
I'll tell you why. So if I'm operating a gold mine, and I believe that gold, while $1,300 an ounce is undervalued, that's the reason I'm in the business, doesn't make sense to continue to hodl gold and pay for the shovels and the personnel and the tractors and the distribution, and then have the operating expense and the capital expense borne either by my shareholders directly in the form of dilution, or borne by my shareholders indirectly in the form of debt service payments that ultimately impact the value of the company long term. So what's important to note, paper hands is a great way to say it, but it's not entirely accurate, because we're extremely bullish on our thesis for Bitcoin. When we've sold Bitcoin, we've used that for two things: OpEx and growth. So we pay very, very well in all the facilities that we operate. We sponsor a ton of educational opportunities. We're doing job fairs right now in some of the towns, offering people. I mentioned Waha again. It's cool to look at their video. There's a kid grew up in this 3,500 person town, and he talks about the fact that I would have never guessed that I'd be working a high-tech job in my hometown. So what we're doing is we're finding these opportunities, but you have to pay for them somehow. So 9 months ago, everybody talked about this is an arms race, and whoever has the most machines wins. We looked at it and determined that by adding more machines, it's going to increase difficulty. We were already beginning to
notice what he says there. This is an arms race, and whoever has the most machines are going to win. That's why I like CleanSpark, because they recognize this was back in October 2022. They recognize if they have the most clean energy infrastructure, that's why they're called CleanSpark, they're going to have the most efficient mining, which is why their costs are the lowest in the industry. However, Bitcoin does have to go higher for their margins to stay the same, which is why the halving event is so important for Bitcoin's price.
To see the trends of energy prices going up. So we thought maybe a more pragmatic approach is to invest more in infrastructure, mobile data centers, transformers, immersion cooling technologies, big dry coolers, switchgear, all of the components that are necessary to successfully operate a mine. So fast forward 8-9 months down the road, we're buying miners at 60% less than what everybody paid for them and pre-ordered back in September. I mean, I don't want to go too far down a rabbit hole, but when some of these companies ordered $1 billion worth of rigs, they had to put $500 million down, and that money has to come from somewhere. So they do an offering and dilute their shareholders.
And so basically Matt Scholl says we didn't dilute our shareholders, we sold Bitcoin. Now, granted, they just diluted the shit out of their shareholders 2 weeks ago with the $800 million at the money offering. But now this dilution isn't like a dilution in a bear market. It's dilution in a bull market, which is a whole different type of dilution. This dilution is, hey, we're going to grow. Whereas in a bear market, it's, hey, we don't have the money, so we need to dilute you. They had the money because they paper-handed their Bitcoin at 69,000. So in November 2021. So that's why CleanSpark, to me, it's always been the best miner, in my opinion. Like management, I don't even know what the CEO of the other companies look like, but Matt Schultz, I think that guy's a rock star. I think he knows what the hell he's doing. But still, if Bitcoin does not go up after the halving event, I don't think the miners are going to do well. And so we need that to happen. And we'll see how that plays out. Meta 521, Coinbase 251, AMD 168, and Netflix 622 on the day. Palantir right now, what do we have on Palantir? Palantir 2244, green on the day, but still down from that 2270 level that we were at yesterday. If you guys want to watch the full interview, I'll put it here in the chat. You can check it out and you can watch it. I saw all of the comments about my beard. Dude, I had that beard for almost like 6 years at that point. And my mom begged me to get rid of it. And I was like, nope, I'm keeping it. I kept it for a very long time. And then finally in 2023, I got rid of it. Honestly, I was being too stubborn. I should have got rid of it a long time ago because I think I look better without the beard too. The beard was intense, dude. That was a big beard. Like that was like as someone said in the chat, I'm not saying it. Someone said in the chat, that's like you're on the fucking FBI watch list type of beard. Okay, I'm not saying that joke. Someone else is saying it. Now I could say it theoretically, and it's not racist because like I've lived that life, right? So I'm allowed to say it. But someone in the chat said it. So you're right. I mean, I'm not gonna lie. You're right. So that's, dude. My mom. I think I told you guys that my mom used to call me a terrorist. My mom was like, "You look like a terrorist." I'm like, "Mom, that's racist." She was like, "I don't care. You look like a terrorist." And I'm like, "Well, it is what it is." Talabeard. Yep. When you got rid of it, yo, Dexter's right. When I got rid of the beard, the bull run started. I got rid of it around January 2023. That's when Tesla bottomed. That's when Palantir bottomed. That's when everything bottomed. Nvidia bottomed. So literally that beard was the epicenter for a fantastic, magnificent bull market rally. And so you're welcome. You guys are welcome indeed. SoFi 751, Enphase 118, Robin at 1815, S&P 513. S&P falling off a little bit now. S&P going red for the day. So we'll see how that sell side pressure continues to hold up later in the day. Rocket Lab, that's up 2%. AMD 168. Bitcoin back above 70,000. And then Palantir here 2245. Tesla down 169. Tesla getting a little bit of sell side pressure. We'll see if that holds up. See if people want to buy up the dip that have been waiting to get into Tesla at that 175 range. But Tesla is down right now. Vitaly says that was the day I got laid too. That's hilarious. That's I mean, look, I'm not gonna lie. The beard did help with the women in college. Like, as much as people want to make fun of it, like girls like the beard. I don't know why, but honestly, that was one of the reasons. My girlfriend in high school, like, I had this beard probably like a senior year in high school, so 2016. She liked it a lot. She didn't want me to shave it, and that was probably the reason I kept it for so long. Because I mean, if she liked it, I was like, okay, if the girl who's having coitus with me likes it, then why would I get rid of it? You know. So that was probably another reason why I kept the beard for so long. You guys think I didn't know the word coitus, huh? Nope. I watched Big Bang Theory once. I learned that word. All right, here's Jeremy Siegal about what he thinks is going to go on with rate cuts.
Professor of finance at the University of Pennsylvania. Jeremy, things had been moving along in a lot of the right directions. Equities, of course, had been on quite a streak. Things are now turning around in large part on the back of this inflation data and the expectations for the Fed. I'm so curious what your reaction to that inflation data was yesterday and how you think Jay Powell is going to handle it.
Yeah, I think as Mike said in the 6 a.m. hour, if the data came in yesterday just 2 or 3 hundredths of 1% lower, it would have rounded exactly to the expectations of the market. It sort of reminded me of what happened after the last FOMC meeting. If one of the 19 FOMC members had raised by 1 tick their December estimate, we would have had a median of only 2 increases instead of 3. Probably the market would have collapsed, but because they did, it said 3 and the market soared. It's so hypersensitive, overly sensitive to these numbers. Let me just read 2 sentences from the BLS report that came out yesterday. After reporting, they said the shelter index increased 5.7% over the last year, accounting for over 60% of the total 12-month increase. Other indexes with notable increases include, and we've talked about this, Motor vehicle insurance up 22.2%. Well, the shelter and motor vehicle insurance are the two most backward looking of all the components of the consumer price index. If you take, for instance, on the ground indexes such as the Zillow index, or particularly the apartment list index, which has an excellent index of monthly rentals, it's actually been zero year over year. In fact, been zero year over year for almost 2 years. We've talked a lot about the way the BOS does it. It's an 18-month moving average that way lags the market. You take auto insurance. It's verified that auto insurance premiums follow 12 to 15 months after the increases in used and new car prices. Well, they all rose during the pandemic.
In other words, are you suggesting that we are overstating or overthinking maybe?
Yeah, you're overstating
the inflationary pressure on the economy?
Yeah, I think they're overstating and overthinking. Now, all that said, commodity prices have stopped going down. There's no question that we're seeing some rise in commodity prices that we hadn't seen for 2 years. And that's something to look at. And by the way, the money supply, which I looked at, is finally beginning to rise again after, being really flat for so long. So that, these things bear watching. But
Hey,
I just think that there was an overreaction to what we actually got. And I really think that inflation is still going down to the Fed target, and that we might see, I said 2 rate cuts. I never thought 3, 2 rate cuts by the end of the year. But more important than that, and if you were to give me the choice, rate cuts or strong economy, it's no contest. Strong economy is better for the stock market.
So Jeremy Siegal does not let anyone interrupt him. He's going to talk. One thing I agree with on Siegal is that the inflation data that we're getting right now is probably lagging. So we're misinterpreting some of the inflation data to the downside, even though the market is eating up the dip. So even though, yes, like a little bit of a sell-off, the market is still eating that and taking that as an opportunity. So the market generally agrees with Jeremy Siegal that the inflation data is overstated because they're eating up the dip. Now, one thing that Siegal pointed out a couple of days ago when he was on CNBC is that he thinks the Fed is doing the Fed is going to go down as one of the worst federal administrations in history. Because his argument is that we should never have been in this situation because we should have recognized the pseudo hyperinflation that was starting back in 2021 was occurring. And the inflation is transitory to him will go down as the legacy defining moment for Jerome Powell to have to put us through everything we're going through right now, given how the market was or how the government was printing money during that time. The problem with that take, in my opinion, and I have the opposite take. My take, and I let me know what you guys think of that in the chat. I think Jerome Powell, if he gets us a soft landing, he'll be the greatest Fed president of all time, Fed chairman of all time. He's better than Paul Volcker, in my opinion. I think he's better. The reason I'm saying this is because it's not Jerome Powell's fault that Trump printed a couple trillion with stimulus checks and the PPP stuff and all that stuff, the loans, and then Biden printed another couple trillion when he got elected. Both administrations printed trillions. So the idea that the Fed could have been like, oh, we're seeing inflation in 2021. Were they wrong? Yes, obviously. Inflation transitory, not good. They should have seen that inflation was happening. Could they have stopped it? Could they have stopped? Do you think Jay Powell is going to stop Biden from his $1,200 stimulus promise to the American public? No. Was he going to stop Trump from printing a couple $100 billion right before he left office? I remember I got a $600 stimulus check. That was because Trump printed a couple $100 billion in December of 2020, and then we got those checks in January 2021. No, I don't think he would have stopped the presidents from being as ruthless as they were with spending. So should they have raised interest rates earlier in 2021? Yes, we should not have had pictures of rocks selling for $7 million. That was bad. But could they really have stopped inflation from happening given how much we printed? I don't think so. And so they did it pretty quickly in 2022, in my opinion, and I got to give them credit. For doing that. And now Stan says he could have raised rates instead of dropping them to record lows. I think we also have to remember there was a global pandemic and there was 15% unemployment. And everyone felt that, we were on the verge of a Great Depression unless we had economic moving. I mean, literally, I remember the satellite images. The Earth was literally getting like more cleaner because there are more clean because there wasn't as much carbon dioxide in the atmosphere. If you guys remember those articles that were popular, because people weren't traveling. Like literally, there was less like less like debris in the air, less carbon in the air. It was crazy how much less economic activity was happening. So I think Jay Powell also felt, well, wait a second, I don't want to be the Fed president that lets a Great Depression happen. Let's keep rates low, pound here 22.35 in order to stimulate the economy. The problem is they stimulated a little bit too much with rates being low. That is a mistake. But I also think you got to give the guy a break. They were dealing with 7 trillion printed in like 10 months. I mean, at some point, right? I default to Jay Powell at least quickly recognizing that and starting to raise rates higher in 2022. So I think he will be the best Fed president of all time if he gets a soft landing. It's going to be really hard to do. We shouldn't underscore how hard it is to get a soft landing. But if he does it, I think he gets the title. S&P right now 512. So S&P is selling off. S&P is selling off right now. Rivian, where's Rivian? Rivian, wow. Why is Rivian down 7%? What's going on? Hold on, let's Google this. What's going on with Rivian? Why are they down 7%? That's a lot. What news came? That's a new low for these guys. They're literally trading at cash. They have $9 billion in cash. They're literally trading at $960 at cash. Why is it down? I can't seem to find any news. I don't see any actual news. It looks like it's just they didn't do any dilution, I don't think. Oh, hold on. No. There's no dilution. Not what I'm seeing. Wow, that's nasty, dude. That's nasty, Rivian being down. That is nasty. Now, granted, I have a friend who bought a lot of Rivian at $10 and he sold it at like $10.15. So he called the bottom 3 weeks ago when Rivian dropped. If Rivian had gone to $9.57 when he picked it up at $10.07, then it would have been nasty for him. But like it bounced, and from when he told me about that, I was like, oh, so I guess 10.07 was a decent bottom, and it stayed at around $10 for the next 3 weeks after that. Today's the first day I'm seeing it down below 10 aggressively, down 7%. There were a lot, and the reason I bring up the story about my friend is there were a lot of people like him that were buying Rivian at $10 because they were quote unquote buying a company trading at cash, right? A little bit above cash at $10. So they were like, you know what, screw it. Like it's trading at cash. It can't go lower. Right now it's 7% lower. It is 7% lower right now. Oh boy. Okay. So Rivian is red. Is Tesla also? Tesla's down 1.3%, not as bad as Rivian. Curious why these guys are down so much. Nvidia continues to stay higher. Robinhood staying above 18. Enphase 118. Apple 168. ARM 126. Intel 37. Amazon 187. Oh, Snowflake got upgraded to or initiated coverage at, I think, Barclays with a 185 price target. So Snowflake is now going to be covered at Barclays. 185 is their price target. Yeah, entire market selling off a little bit. Not too crazy. We did get a not the best PPI report. I will see later throughout the day if this dip gets eaten up. But some of the stocks that were really down in the pre-market, they did get eaten as soon as the market opened. S&P right now 513. We'll see if that continues to trend lower or higher. Robinhood at 1809, and then Palantir at 2240 for the day. All right. Oh, Bank of America downgraded Rivian. There you go. That's the news. Bank of America downgraded them. All right. So that downgrade got Rivian to continue falling lower. Down below $10 now, down 7%. All right, let's do word of the day, and then I will get you guys out of here. We're going to sound it out together, so we're going to get this word correct. Okay? I feel like so much pressure now, dude. This is actually a little... Okay. Zetatic. Is that unreasonable? Zetatic. I don't think that's unreasonable at all. I really do not think that's unreasonable. Zetatic. Okay? That's not... Dude, I don't know why I keep pressing X on the StreamYard link for some reason. I don't know why. Like every time that I feel like every time I have to do the word of the day, like my instinct is just like leave because I'm gonna get it wrong. So okay, I'm back, right? You guys can see me. I'm back. I'm back. All right, I'm gonna press it. Here we go. I'm gonna press it. We're gonna listen to it now. There's no way I get this shit wrong, dude. There's no fucking way. Zetetic. Here we go. All right.
Zetetic.
What the fuck, dude? No way. What is this?
Zetetic.
Why does she say it like that, dude? She sounds like she's like French or something. What is that? Zetetic. No, dude. No, it's zetetic. Fuck that. What does it mean? Proceeding by inquiry or investigation. Okay, how do they use this word? The detectives. See, do you want to say the detectives zetetic? How did she say it? How did she?
Zetetic.
Do you want to say the detectives zetetic mindset or the detectives zedetic mindset? I take the latter. I take the latter. The detective's zedetic mindset led her to question the suspect from every angle possible. Through their zedetic exploration of the problem, they were able to propose innovative solutions that others had not considered.
Zetetic.
Did you guys really think it was zetetic, dude? Did you guys really think it was? It did not look like. I know there's a z right there, but still, that did not. Like, I would not have said it like that, even with the z right there. Zetetic. I mean, when you sound it out, it does make more sense like that. But still, zetetic to me is better than zetetic. It's literally phonically written for you below the word amid. Never sending my kids to Rutgers. This is not a Rutgers thing, okay? This is a I was raised with enough confidence and humility to believe in myself type of thing. And that's why I have a unique interpretation of how to say these words. Zetetic is not that different from
Zetetic.
The difference is one person saying it right, the other person saying it in the way that the propaganda machine of dictionary.com wants to impose people to say it. And like, I'm just not going to buy into that machine. That's all. I'm just not going to buy into that machine. I said coitus right. I definitely didn't say coitus wrong. Hold on. The coitus pronunciation, I definitely said it right. Coitus word. I definitely said that word right. There's no way I said that one wrong. There's no way I said that one wrong. Hold on. I have Merriam-Webster. I have that one here. Amidst zetetic approach towards palantir is impressive. Okay. How do you say this?
Coitus.
Wait, really?
Coitus.
Okay. There's no one that can think I was saying coitus wrong. I really don't think I was saying that one wrong. I know dictionary.com is saying coitus, or Merriam-Webster, but I don't think anyone calls it coitus ever. Right? Like, people say coitus. That, like, there's no
Coitus.
Dude, no one says that. Like, and you guys have to have my back on this one. You have to have my back on this one. No one says coitus in
Coitus.
No one says that. Like, no one does. Like, I'm not wrong on that one. You can disagree with the other one, but like, I'm definitely not wrong on that one because I'm about to go find a bridge if I'm wrong on that. Like, this is just getting. I don't think. Okay, thank you, Ethan. You agree with me. I don't think you said coitus wrong. Mike says just say sex. No, dude, we gotta have some class here. Okay, we can't just say sex. There's a certain way to say these words. Amit, it's all good, man. You didn't learn English. It's as your first language. No, I did. I did. My sister learned Hindi as her first language, and she had to take special classes when she was in middle school. And so my mom, who had me 4 years later, made sure not to make that same mistake. And she made English my first language and Hindi my second language. So I actually did learn English as like my first language. So I think for myself, and certain times when you think for yourself, you're going to say words in a way that you believe they should be said, not the propaganda machine. And that's okay. We're gonna have to live with that. That's it. Okay, at least you guys agree with me on the coitus thing. At least you guys agree with me there. All right, so that's it for me. We'll be back. Another Daily Palantir episode. Palantir put out this user-centered machine learning article that I thought was really interesting. So I'm going to focus the video today on Daily Palantir around that. That'll be out in a little bit. And market close at 345. We'll see how we end out. Almost the end of the week, getting closer to Friday. So we'll see how this market ends the Thursday that we have. And then, yeah, at 1 p.m., I'll be live with Jose. We'll be talking about Intel and Google and their chips for semiconductors. So if you're interested in that, we'll be live at 1 p.m. And then at 12 p.m., I'll be live, or not I'll be live, but I'll be in the Palantir webinar they're having. If you go to their Twitter page, you'll find the link where they're doing a webinar with Lowe's. And all you have to do is sign up, and then you get access to it, and they'll be taking questions live. And I think that'll be interesting as well. I'll write about it on the newsletter today and talk about what I what I learned from their webinar. If you're not subscribed to the newsletter, please, please, please subscribe. It's free. dailypalantir.substack.com. You get an email newsletter every single day about Palantir. It's like a 5-minute read. So please, please, please make sure to subscribe to that. All right, that's it for me. Have a good day. I'll see you guys at 1 p.m. and then at 3:45 for the market close, and we'll keep going from there. Bye, everyone. Have a good one. See you in a bit.